Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Wednesday. It's November 30th. The month is almost behind us. I want you guys to tell me, where did November go? Where did November go? It seems like October's just finished. I can't believe we're entering the last month of the year. It really blows my mind away. Folks, if you're watching this video, please like our video, subscribe to our channel, and post comments. I actually enjoy these comments, and I interact with you guys on YouTube, and you guys can get a lot of value out of it. It's on the Wealth Press YouTube channel. Now, it's about 7:57. The market's going to open up in about an hour and 33 minutes. And boy, oh boy. So let me give you a menu of what's on the table today. I mean, ADP employment report, the GDP, the biggest report of the quarter, international trades in goods and services, Chicago PMI, the JOLTS, petroleum report, home sale, and Mr. Jerome Powell speaking. Mr. Jerome, I won't tell you the truth till you reappoint me, Powell is speaking. And then to top it all off, you have the beige book. Folks, this is not a time to be a hero. This is not a time to be figuring out what to do. This is a time to kind of chill out, wait till the dust settles, and then come back. It's kind of like when there's a hurricane or something really drastic happens, you want to hide. That's one of those situations. You do not want to be a hero right now. Now, looking at the bond market, I believe the bond market is at an inflection point. As a matter of fact, it looks like it topped out, and it looks like it's going to start cooling off and going lower, which means stocks will be under more pressure after today. And I think it's almost inevitable to see that in the near term. If this rallies back up to the 104 level, maybe I will actually sell a short in this position because I think the bond market will in fact go lower. Let's talk a little bit about global economy and what we can expect today before we get into the nitty gritty. Oh boy, what a day today is going to be. Market participants are awaiting a key speech from Mr. Jerome you-know-who Powell for further clues into how things are going to go. In Tuesday's trading, Apple, I don't know if you saw yesterday's market, but we during the day, we just went down straight. We were up about 100 points, and then we just flatly broke down. That was mostly Apple. It extended Monday's losses as investors are really worried about how COVID is going to impact China, where the iPhone factory is located. Data showed consumer confidence eased further amid persistent worries about rising cost of living. Because there's no way consumer confidence can be really strong in this environment. Now, this is something I've been talking about every single day, and it's been unfortunately moving in that direction. So remember how after the CPI and the PPI last a few weeks ago, again, time totally gets away from me. You could have told me it's still Halloween tomorrow, and I would have believed you. It seems like my daughter was just getting ready for Halloween the other day. I don't know where this month has gone. But nonetheless, look at 0.50 basis point as it's priced into the bond market, 67.5%. This number was over 80%. It was like 85%. And this number was like 13%. It's doubled now. The odds now we're above 32%. I wouldn't be surprised if after today, this number went to about 40%, 45%, and this number went to 55%. So again, keep an eye on this. And I'm always very mindful, and I always point this out. The bigger this number gets, the 0.75 number, the higher the odds that we're going to be going lower instead of higher before going higher. I hope you guys understand what I'm saying. All eyes are focused on the ADP. I explained that's a very big report coming out. That's the National Non-Farm Employment Change data. The average forecast is 200,000 compared to 239,000. Then we have the GDP, which stands quarterly at negative 0.6. And they're expecting the third preliminary figure to be at 2.7 quarter over quarter. Now, U.S. JOLTS job opening. I'm telling you, today's a big day. It's a very fertile day. Because of the holidays last week, too, they kind of have everything this week. And today, I think most market participants will finally be back in. Economists foresee a 10.3 million in October compared to 10.7 million the previous month in September. Pending home sales. They're looking at 5% down month for month compared to previous month of negative 10%. Do you guys realize that would be huge? I mean, that's really coming down. This economy is having a major impact. Interest rates are having a major impact on interest rates. Crude oil inventories will be reported. Economists estimate a figure of negative 2.758 million compared to last week's value of 3.691 million. If this number is a little lower than expected, Oh boy, we can have a rally in energy, which I am expecting in the near term. The Eurex stock futures is up a little bit. Not a lot of data. Eurozone CPI reading for November came out. Again, markets are fragile, and Europe is looking at USA right now. The Eurozone inflation has been reported at 10% year over year in November, down from 10.6% the prior month, demonstrating a clear downside trajectory. The Shanghai Composite closed higher. Investors mainly ignored business activity. They're looking at zero COVID policy and how that's going to turn out. This is a real big issue over there because it can have a big impact on U.S. and other countries because China is the biggest exporter in the world. The Nikkei index closed lower after industrial production stood at negative 2.6% month over month, weaker than expected of 1.5. And again, we've got a lot of news on the table. You've got to keep your eye today on the broad indices. I think we're going to see a lot of volatility. Now, I want to show you guys something. This is all the stocks in the universe, in the USA, trading above the 200-day moving average. All right. The number is 43%. It's not really high at all. It's not even doing anything. Now I'm going to show you the same graph of all the stocks in the S&P trading above the 50-day moving average. So you see how this isn't even anywhere close to the top. It looks really vulnerable. If this was to cool off and come back down like this, nobody would even blink an eye, right? I mean, this is not even 50% of stocks are trading above the 200-day moving average, which means 67% of stocks, or 57% of stocks are trading below the 200-day moving average. This is the entire market, any stock over $2. Now look at the S&P 500, the 50-day line. So if you look at this graph and this graph together, you would get a very good idea that the broad market is still fairly weak, but in the short term, it's going crazy. It's like that Great Dane off the leash, wanting to see your next door neighbor's cute little puppy, and you're pulling it back. That neighbor is like about to put that puppy in the mouth, okay, right here. And you're about to pull it back. So we are grossly overbought. Matter of fact, in the last 15, 16 years, we've hardly ever been up to this level. 1 time, 2 times, 3 times, 4, 5, 6, 7, 8. So we're grossly overbought, but at the same time, markets are vulnerable. And if you look at the S&P 500, which we will look at here, you will see that we're coming down. So this to me is a very clear picture of a weak long-term trend and a super strong short-term trend. That's a classic sign for a pullback, right? On a bull market, you want a very strong long-term trend and a weak short-term trend so you can buy pullbacks. In this case, you have a strong short-term trend and a weak long-term trend. That ain't good. That means you're building a house without a foundation, and that's huge. So I'm expecting the stock market to start sliding some more. There just isn't any good news on the table to cause the market to rally that much right now. Now, volatility, as I mentioned yesterday, volatility is going to start picking up, and it is. Let me show you a chart. I think volatility is going to start coming back up here and spiking back towards the high. And if you look at the CPC, which we haven't looked at in quite a while, it's in that danger zone right there. So again, stocks are a little bit overdone, but with the momentum level, overdone to the upside, with the momentum levels we're seeing, it's almost improbable for this to continue. And then when you're looking at that, the short-term trend, and you're comparing it to the long-term trend, and you're seeing the S&P fall down, it just doesn't look all that great. So I'm not exactly a bull right now. Now, do I think we're going to go lower and break down? I think we're going to come down and hang out around these levels. Here is how I believe the S&P will be looking, because this is a consolidation that we're seeing in small caps. This is small caps. This is Kathy Woods. She peaked out a year before the stock market. The stock market peaked here, she peaked here, and look at where she's doing. She's going through consolidation. And as I mentioned, we never broke below the May lows. I mean, we kind of did, sort of did, but you know what I'm saying. The trend did not break May lows. We're still kind of in that little area. So I think what's going to happen is before the U.S. market really begins to go up, we're going to have to get into a consolidation period, which is something that may be happening in the near term. The put-to-call ratio, as I mentioned, is not really favoring the bulls right now, and there's a lot of news on the table. Now, looking at the major indices, and we'll do that right now. By the way, I wanted to point out something else to you guys. The number of stocks making 20-day highs versus 20-day lows, 82 to the upside, 20 to the downside. So we have not started a downside correction. We have not even started it yet. This right here hasn't even, it's like throwing little stones at an elephant, and the elephant, you're just getting his attention. The elephant has not turned around yet. It's just turning around now. So there is plenty of opportunity to the downside right now. You got to be very, very careful to the upside and trade only defensive stocks. Now, to the upside, I like healthcare. I like this Unprovident Corporation, UNM, I call it. I've called it UNM forever. It's trading below the 50-day moving average. It's not overbought. It's coming off oversold territory. And if you look at what the company does, you will see accident health insurance. That should stay fairly stable, and earnings per share versus previous year are actually up, and the stock is cheap. So I like this stock, and I believe this stock, especially if the market cools off, I think we're going to see a lot of market cap moving into defensive, safe, energy, industrial, those type of stocks. And I think this stock is going to start popping again. But be very cautious, and you may want to wait for it to trade above the 50-day moving average. So wait for it to trade above the 42 level. It's at 41.72. Wait for it to close where the low is above the 42 level. It may be a great trade. To the downside, oh boy, Zebra Technology. Let's see what Zebra, with a name like Zebra, doesn't change its stripes. It may have to in this market. Thermal processing, general industry machinery equipment, information technology, hello. Mobile computing, data capture, radio frequencies. I don't know about this stock. The P ratio is still a little high. It's down 54% for the year. The earnings per share is anticipated negative. This is no Microsoft, okay? So I think Zebra is going to start cooling off and taking us down to the 226, basically coming down to the low. And if you look at the information technology as a whole, you will see that it's doing exactly the same thing as the Zebra, and Zebra doesn't change its stripes, and the market doesn't change its stripes either. So I think the communication sector, the consumer discretionary sector, right here, the technology sector, I think they're all going to kiss the lows or come down nicely to the 120 or down. The bottom line is this market is not ready to go higher, and I'm not the only one that thinks that. Now, folks, remember, you've got UNM to the upside and Zebra to the downside. Here's that ticker again. Let me show you Zebra. The stocks that we're trading, Zebra. Now, before I let you go, folks, make sure you watch and take notes on Celeste Lindman's, I don't know why I can't say her last name, hosted webinar if you haven't done so yet. I believe today might be the last day to do so. All you got to do is click the link below, watch it now, and if you're on the YouTube Wealth Press channel, it's in the descriptor of the video. Now, I'd say this information is unknown to about 99.9% of traders. Yet, it's based on a trend that has stayed true all the way to 1927 or 29. I don't know, 27, 29, anything below 30 years is good enough for me. She calls it the 5-day turnaround. And I think once you watch the trading, you'll see why it can help traders ignore all the noise they're seeing in the market, noise of that intraday data and just the news headlines, and just focus on a true trend, a trend that's been there every single year since the Great Depression or even before then, 1927, 1929. I wasn't born there, so I can't confirm, but a long time ago, almost 100 years. Now, here's the thing. You want to know the best day of the week to buy stocks? This will show you. You want to know if these techniques that we've been applying work with the when the stock market's trading below the 200-day moving average? It's covered in there. You want to know statistics? It's covered in there. You want to know how often this thing hits it on the S&P and the results on the S&P? We'll show you. I promise, after this class that Celeste has put together, you will never ever look at the market the same day again. That's a promise. Follow the link below, check it out, and do it now. And remember, I want to see comments, feedback, love letters in the YouTube Wealth Press channel under these videos, and I will respond. You can also send me an email, support@marketgeeks.com. Have a great Wednesday. Stay out of trouble. This is going to be a dangerous day. Bye, guys.